Stocks to buy now, and this is your stock market update. So we have Tesla in the news being upgraded right before the Tesla battery day. Lots more information on that. Also, Amazon, PayPal, and Shopify in the news. The digital e-commerce plays. Amazon stock in the news because of a court ruling, and we'll get more into that. And also PayPal, the CEO has done an interview just discussing the real fundamental strength of the business going forward. These e-commerce plays like Shopify, PayPal, should you be getting into them now because they've had a big run? Is there a future in them? We'll discuss all of that. But first, let's get on to just some quick market news, which is US Treasury yields, which are actually edging a little higher. So as we know, yields have been at historic lows. Incredible, essentially negative yields on treasuries, which has forced money and investment into other areas, like we see gold and a bunch of equities doing very well, money flowing out. Well, this is really off the back of the slightly better jobs numbers that came out yesterday. So these are not good jobs numbers for the States historically, but things are maybe possibly starting to get back to normal with fewer jobs claims. And so that's why treasury yields are edging up. But let's get on to Amazon. So the news is that actually they have lost an appeal. So in the California 4th District Court of Appeals, it actually ruled that Amazon can be held liable for damages caused by defective replacement batteries for laptops. So this was actually a battery that was ordered through Amazon from a third-party seller, and it caused damages. Amazon was sued, and it was found in that court that Amazon could be liable because essentially they are the middleman. They are creating a substantial part of this transaction. So what does this actually mean for Amazon? Well, Amazon Marketplace takes up to 60% of the sales of Amazon. So it's incredibly integral to Amazon's business. Now, how does this relate to the share price? Well, actually, in my opinion, I don't think it has a massive detrimental effect on the overall business for Amazon. Amazon obviously is very diversified in the businesses that it has, and this may mean higher product costs for the customer, possibly some higher insurance costs for Amazon. But I think in terms of the business in general, I don't see it really having too much of a negative impact overall. So Q2 earnings for Amazon were absolutely blowout stellar. They were really one of, if not the biggest beneficiary from everything that's going on with the move to digital. 40% year over year increase in earnings, 89 billion for Q2, which is just absolutely insane. According to tipranks.com, which puts together all of the different analysts online, 38 buys for Amazon stock, 1 hold and no sales. There's not a single analyst, according to TipRanks, that has Amazon stock as a sell, even after the incredible run up that the share price has had and the business has had. Why is that? They just see more fundamental growth for Amazon and other digital plays, which we'll get on into in a second, like Shopify and PayPal. So the share price at Amazon, just over $3,000 right now. It's actually up a little bit in pre-market trading, which means this news, I guess, isn't really affecting trade in the stock whatsoever. So going along with maybe what I thought. Now, Shopify itself, which is another play in the e-commerce space, definitely different to Amazon, but it is more or less in the same sector in terms of helping e-commerce and digital commerce, even offline in those bricks and mortar shops. Obviously, that has not grown as fast as the online digital marketplaces that it has. Shopify also having a very good run up. So 120 billion this company is valued at right now. 97% year over year growth from Shopify, which is amazing, and we know the reasons why. Now, really the trade is now, is that going to continue? Actually, a few analysts believe it will. So they actually turned a profit during the health situation of 29 million. As we know, they're still a growing company. So that's a very positive sign for them. When you make money, you can start investing in other businesses to grow even further and faster than before. So the growth does create scale for that business that it wouldn't have had otherwise without this essentially boost to their business model in general. According to motleyfool.com, they say Shopify has definitely benefited from an accelerating revenue stream related to the economic fallout created by the health situation. The services it provides have become essential to many businesses. The need for Shopify's services will remain high. And that is really the key, because once merchants use Shopify and start having Shopify as part of their process, it's almost impossible to come out of the Shopify ecosystem. And why would they? Because it makes things more simplified for the customer in terms of payments and all the payment systems, all the back end, all the stock that you can do with Shopify, all of the data that you can get with Shopify. Using it is beneficial for small and medium enterprises, SMEs. People have jumped on board with Shopify, and we'll see how much they can stick those customers and actually keep them in the business. But in terms of Shopify's business model, this has been a great boost to Amazon, to Shopify, and to PayPal, which we'll get onto in a second. But the price to earnings ratio of Shopify before all of this health situation was 27, so pretty punchy, but it was a growth company. Now the PE is 57, and this is pricing in much higher future growth. Now, what part of this was speculation on the share price, pushing it higher based on all of this health situation? There is definitely some of that, and we can see Amazon and PayPal and Shopify over the last few weeks trading sideways. Not really. I think traders are just trying to work out how much of these businesses is fundamental growth, and obviously that rise of traders trying to get in and make some quick money. So along these lines, we also have PayPal in the limelight, and the CEO was interviewed on CNBC. So PayPal is really benefiting from the move to digital and online payments. They were always that, but it's not really just paying online for things anymore. It is paying with digital cash in the real society. And it looks like PayPal is benefiting from this massively. So we know PayPal has Venmo, and also in the same space you have Square and their app, which is called Cash App, all benefiting from this. And we've seen massive fundamental growth in all of these areas. PayPal's Q2 results very quickly, 50% earnings growth. It's incredible for a company this old and also this large. 30% total payment volume increase, and revenue growth year over year of 22%. Incredible growth, and the stock has doubled this year. So again, Shopify, Amazon, PayPal, these stocks have increased a big amount. So is this the wrong time to get in? Well, it looks like most analysts are saying that there is fundamental growth here, a shift in the way that consumers actually spend money. People don't want to use cash anymore, and it is quickly going over to PayPal, who is one of the winners. And then finally, we move on to Tesla, which has been upgraded at Morgan Stanley, not JP Morgan, like I think I said at the start, but the analyst at Morgan Stanley upgrades Tesla stock from underweight to equal weight. And actually, when it comes to Tesla, that is high praise indeed, because there aren't many people that have this as a buy, well, analysts anyway, because well, they pretty much don't like Tesla stock and think that it's totally overvalued in every way. But anyway, we won't get into what they think, but this one anyway is moving it towards an equal weight from underweight. And he actually raised his price target for Tesla from about $1,000 to $1,300. Tesla now trading actually above that. As we know, there will be a 5-to-1 stock split in Tesla, taking the value of each share down a little bit, more shares in circulation, so no fundamental change, but definitely worth to keep in mind. So this analyst, why is he changing his outlook on the stock? Well, he wrote, Tesla Battery Day could be a game changer, and based on what we know so far, there is growing risk of Tesla becoming a new battery competitor armed with superior technology. And this comes ahead of the Tesla Battery Day, also known as the shareholder meeting. And it is fully expected Tesla will unveil the latest battery technology that they've been working on. This is really important for Tesla because it will essentially increase the energy density of batteries, meaning that you can fit more in the same space. It will reduce costs, and also it will make the cars more appealing because they will be able to go farther, faster. Not only that though, not only the cars, but also just battery tech itself. They can see this battery tech being used elsewhere outside of the automobile industry, for example, with homes, or more importantly in industry, having the industry get on board with this battery tech and have, instead of replacing generators, oil, coal generators, whatever it is, with this battery tech could be a huge move and a big boon for Tesla. Tesla is also expected to announce updates to the Model S and Model X powertrains, just making those improvements making improvements to the cars all the time. So this may take advantage of something that they call the million mile tech. And the battery day is on the 22nd of September. So this will be after the shares are actually split. So the share price will look different. But they will be having this at the Fremont factory in California. Now, I fully expect trading volume around this event to be extremely high. Just looking at the analysts put together on tipracks.com, 4 buys, 14 holds, and 10 sells. So yeah, analysts really just thinking this thing is overvalued. But there is a lot in the future for Tesla for sure in terms of this battery technology and the solar and many things that really aren't generating income right now. So very hard for analysts to guess. They usually just go on the solids that they can actually see right now. But in terms of Tesla and the future, we've seen some job postings online in China for a senior car designer and a design manager. And this could be related to a new model Tesla car that should be produced locally and possibly being shipped out to the worldwide market. So a new form of car, a new model definitely coming as well, it looks like, from that new gigafactory that they have just outside of Shanghai in China. Anyway, that is your stock market update for today. Thank you for watching, and I'll see you in the next one.